The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Tuesday, the 19th of November. We're looking at the conflagration being accelerated over in the Ukraine-Russia area, and the market's not liking this. Nothing here. It actually looks all that good. I am looking at some buying pressure keeps coming in. But buying pressure hasn't really held all that well. It keeps, you can see it here in the futures. Let me get to the futures right here. You look at these red and green candles, just a whole mix of red and green, red and green. There is a bias in the 5-minute that is really very nice. The day is young. Let's see if this can continue. But in the meantime, back at the ranch, what I am looking at is I'm looking at a chance that a little later in the day, maybe there's something that happens that says things are not that bad at the moment, and the market, because the market has been trying to rally for a couple of days now. So most importantly, let me get out of this. I just want to go straight to this right away, and I want to show you something quite interesting. With all the selling pressure from the 11th, remember, I need to just do this to show you. So we've got to go back to this chart right here where I said a measured move from the left to the right of the March, from the March high of 2024 to the July high of 2024 gave you an exact measurement to the 11th of November. It turns out, this is just, I don't know how it works that way, but it turned out that was the exact day of the high so far for the Dow. Now we've pulled back, and you can see from this chart right here that the 9-period moving average is still quite strong. It won't be strong if there are another few 100-point down days coming up. But so far, this is really quite strong. And we did have yields, and it's usually the yields that give you the sense that each time we're making this dark news index toppy pattern. We've done that for ages, but the yields haven't been an issue for a while now. And look, here it is. You can see it's just a single move to the downside. And my thinking was that over a period of a week or two, we would start to move higher and have this as an internal high and then get the residual high. And then we've got to be somewhat careful of what's going on. Anyway, so that's just the scenario. And in my webinar, I excluded that scenario, saying, no, what we want to be looking at is other areas. We want to be under the radar. In other words, we want to be looking at areas that are not independent of the market, but are showing some independency. And that's really very good. And I'll go through it in a moment. So right now the Dow is at 359 at 43,030. This is the first time the price has gone under the black 14-period exponential moving average. If you look at the S&P, it's the same thing. The S&P, type it in over here. I always do that. I forget. Here we go, S&P. Underneath for 3 sessions, it's gone below. And this is the third session below the 14-period moving average, and yet the 9 is still very good. So this is a work in progress. And everything about this suggests to me that this market isn't really ready to tank in the sense, and I shouldn't use that word with military, to decline sharply, because there are a lot of areas that have enough stocks within that sector, and this is really what my webinar was about, to be able to say, hey, we could move higher here. So you'll see even now, I think I'm correct in saying even now, yeah, there is. Look, you've got this 200-period exponential moving average in the 1-minute chart. Look how many times the price has gone above and below and below, and now is struggling because that 9-period moving average is trying to hold positive, and you can see that it's not like we're just tanking. At this point, with all the news that's out there, especially with waiting for NVIDIA to come out with earnings, and really you can't base everything on one stock, but that stock is very important. All I can say is, looking at the volatility index, looking at this rotation through the different sectors, I still see buying. And the buying just keeps being curtailed by these statements that are not really reflective of the general mood of the market. So with that said, let me just get this right here. Okay, I want to get 70. Okay, so with that said, I'm going to just go straight to this particular chart right here, which I think is important for the macro view. And that is the US, the bonds. 30-year Treasury bond continuous contract. To me, this is really important. Why? Because at this particular moment, the market is kind of ignoring the higher yields, and then you'll see that here with the TVT. This is the yields themselves went to a higher high. Is that a leg F? In the daily chart, still a leg A to the upside in the weekly chart. But if you go to the TNX, and this is going to be really important. Look, here's the TNX. It made a doji candle peak D the other day. It is attempting now to start a pullback. And my eye, this is just based on the technicals that I'm looking at, my eye says that you've got this M-shaped pattern in the MACD. You've got lower RSI. That means that RSI is a little weaker now. You've got the stochastic at 74%, under 80%. Only the 9 is over the 14. But you have got a peak D and a gap down today. And that's just suggesting to me, based on the weekly chart, which is at 88% in the stochastic, and the MACD is good. All of this says on the very short term, we can have a pullback. But so far, yields do want to go higher in the bigger picture. But with that said, it seems to me that as far as yields are concerned, there is just a chance that we could have a little bit of a relief rally, so that yields can come down, bonds can go higher. And if you're looking at crude oil, that's another pressure. It's in the lower range. It hasn't really broken out. With the kind of news that we've got right now, you should be looking at yield at the crude oil up in the 75 area, not the 69 area. It could happen. It hasn't happened yet. So I see little waves of buying. Now, when I go to the gold contract, I consider this. We did go long the other day, gold. I do consider this to be a bounce. I don't think this is the big move for gold just yet. We've had that huge move. Now there's a big consolidation from 2,800 down to 2,550. And at this particular point, we're at 26.46. I think this is, to me, I'm going to treat it at this stage as a bounce. So that's gold. And all I can say is that if it takes out 25.90 in the next 2 days, it says, gold and the Middle East conflagration just settling quietly for the moment, just for the moment. And if you look at silver, you'll see that silver's up 0.05, not very much. And it's trying to turn up, but it's really not doing very much. I'll be back in a moment. We'll get to stocks and other things that I need to talk about. Basil Chapman, Tiger. This is our Dow's down 371.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Folks, we're back. So the Dow is down at this point 375. So a question came from YouTube about, is this not a S&P stork leg? No. The stork leg formation is a very specific pattern. Look, here it is, Microsoft. We did this. It worked out perfectly. What happens is that as the price unfolds, it starts to make higher highs and higher lows. And that cannot be a rectangle. It must look like an oval. And then you look at the left side and you say, that's the leg going up. It doesn't mean to say that it has to be, it can be a little jagged, but it's a long rise to the upside. That's the leg. You have the stork leg, it has a thin leg, and then it has the oval. It has to be an oval body. And then that oval body has the neck, and the neck pulls back. And then the neck goes above the body. So there it is, a leg, body. Let me just use my pointer. It's a little clearer. Leg, body, neck, and beak. So here's leg, body. See right there, we called it a body. Then there's the neck right there. Neck goes to 468.35, week of the 5th of July. And then it comes tumbling down. And it took out the body low. Remember, there's a whole panoply of rules that I have with the Chapman Wave, a very specific thing. Chapman Wave stork leg formation, found it way, way, way back, and have used it very well since. And if it goes underneath the body low, that means there's a real good chance that the big rally, and there's always a really strong rally after that concludes, and then you're on your own, that stalls. And that's exactly what we're looking at in Microsoft, just kind of stalling sideways. I should mention we're long from 338. There it is at 412. Okay, so that is the stork leg formation. Next thing that I want to look at here is, let me just go through this. I've got, let me go through. So there's some questions. Okay, so the questions that I got were, number one is, are the weekly charts, this is a really good question, Basil, are the weekly charts, as you always look at the bigger time frames, are the weekly charts still telling you this is a bull market? And let me just go through this one at a time. Look, here's the middle chart is the weekly chart. Dow, INDU. We haven't finished the month. We're only just over halfway. Yes, it's a leg F, probably a peak F in the weekly chart. But look, the MACD, the 914 is way above the 9 is over the 14. The MACD is still positive. Stochastic is still positive at 83%, but it is pulling back. The blue line, the on-balance volume, pulling back a little bit. So absolutely, the weekly chart in the Dow is still very strong. S&P, very strong. Look at that. Peak D, maybe a peak D this week. 9 is over the 14, price is over the 9 right there. MACD is just about to cross negative, but it hasn't. It's at a 0% level in the histogram. That's the vertical lines. And the stochastic is strong at 87%, and the on-balance volume is strong. QQQ, a little different. QQQ popped to, I've got this as a leg C. G/C, I should really do it because if there's a question, then I just have to have the alternate count, G/C. But the 9 is over the 14, price is over the 9. The MACD is still positive, although the week has still got to go to Friday at 4 o'clock, but so far it's positive. Stochastics at 87%, on-balance volume strong. Nothing weak here. Let's go to IWM. IWM had the big spike to a leg D. The price is over the 9. 9 is over the 14. MACD is good. Stochastic is at 78%. It's under 80%, so that's a little negative. But the on-balance volume is still very good. It has pulled back. So far, even that's very good. Now, it did do the double top 244.46 in November of 2021, and then it retested it to 42.39, a fraction under in this leg D, and so far there's an inverted green Chapman wave Roman candle. So let's talk about that for a second here while I lower this. And no, I'm not going to talk about that. We have to wait for the month to finish. Not going to waste time. Let's go to the SMHs. That's a little different. SMHs weekly is the 9 is over the 14, but barely. The price stalled in this arch formation. In fact, I should draw it in. Yeah, see, this is the part that's making me a little concerned, just in terms of timing, is that we've now got the missiles that have been approved for Ukraine. So that's a big overhang on the market, right? And we've got NVIDIA. And the SMHs, the semiconductors, which usually lead us up or down, are stalling. They're not breaking down. They're not breaking up. They're just stuck. And you've got NVIDIA coming out, and they've got black something or other. What is it called? That they've got for their new chips. And evidently they overheat a little bit. I don't know. All I can say is that NVIDIA made a top at 149.77, above the 140.76 high of June of this year. So far, the technicals are really strong. What if there's a surprise? Because the orders, it's really backlog of orders that I think might change even a negative outlook for NVIDIA. So I'm watching that very closely. So I needed to put that into perspective. Let's go to the XLK. That is the S&P Select Tech Sector. Made a high. This is fascinating. Look at this double top. So it makes a high. It was an unusual peak C failure at 238.14 the week of the 12th of July. 238.14. Where does it go to 3 weeks ago? 237.90. No, that doesn't make sense, does it? 238.14, right. So it's 237.84, less than a dollar away. Now look at these double tops. All over the show I'm seeing double tops. What was the one I looked at this morning? NOC, this is Northrop Grumman, Global Aerospace, even emergency services. October of 2022, it goes to 556.27. What was the high last month? 555.57, less than a dollar away after 2 years of plummeting down to the 430s. It comes right back again and it stalls right there. I love these double top patterns. Okay, so what we're looking at this particular point is that my weekly charts are still very, very strong. That's really what I wanted to say. And I keep seeing buying coming in. Right here. Look at that. Buying coming in, and now the E-mini, after that big plunge to the 56, 55-ish level, has come right back almost to the high that was made a little earlier at about 935, 940. So this is really interesting. It went to a higher high, fractional higher high. So this is now peak A. Oh, look, let me do this. This is a great example, Chapman wave methodology. So that's a leg A. It pulls back. Under it, it has a gray A, because it's under the previous A. I'm not going to change color. A gray B. And now, because it's gone fractionally above, that becomes a blue C. So now the 5-minute is already in C, and the 10-minute is in B. It's a very simple technique, but you've got to be faithful to identify each higher peak and each lower trough. Troughs on the way down. I'll be right back. Basil Chapter goes down peak 45.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks, we're back. Dow's down 301, coming back nicely. The S&P down 18. So this is what I'm looking at. The 5-minute E-mini at 5905, that would be the next target. But I think over the period of this morning, we should try at least for 5912. This is the 200-period exponential moving average of the E-mini. We're at 5898 right now. And that'll be the next step. If we get over that, I think there'll be buying coming into for most of the day. So it's a work in progress. Let's put it that way. So the Alcoa, one that I've featured often enough in my webinars and my videos that I do every weekend. I think this is telling us a story. I think this is telling us about the general economy. Look, the monthly chart goes from 98.08 back in March of 2022, plummets down to the just about 21, 22 area. And that is in 2023. And it starts peak A, pulls back, peak B, a sharp pullback, and leg C. And I've got this there's a chance that Alcoa could get to the 57.61 high of January of 2023, almost 2 years ago, almost 2 years ago. And that would mean that it gets there by about December or January of this year. That to me is a little aggressive. I've drawn this in as the Chapman Wave inside wedge target resistance line right there. But most importantly, the fact that it's due, look, the day's up $1.29 at 45.27 and had a pretty big pullback from the left side, right side price time match that we had drawn in from 45.48 back in June, plummets to 27.12. That's quite a drop. The 5th of August, and then it rallies, makes a dreaded H pattern successful, and it rallies all the way through the 200-period moving average and works its way all the way back to that 45.48 high. It goes to 45.90. No, it went to 46.55. Not bad, huh? Just over $1 higher. And now it's had a little drop. This is like a cup. A little mini handle, not one of my favorite patterns, but this one is starting to improve. The MACD is it hasn't yet, but it's trying to cross positive. If it does, that's going to help it push into the 47.48 area. And that just says to me, if you're doing your homework and you're going through the different sectors, then what you're looking at is PAVE, which is the global U.S. Infrastructure and Development ETF. That's kind of a signal to say, yep, the different stocks, I went through them in my, some of them in my webinar the other night, just to make some points. And it gapped up. It hasn't yet filled the gap. It's done partly, but that's really important. The fact that it had rallied so strongly just tells me you cannot ignore that there's, within the United States economy at this particular point, there are core ingredients that are very strong. I think that that's very important. Okay, got that out the way. The other thing I want to look at just right now to see how it's doing. So the question came in, could you look at JP Morgan? I will in a second. So 50.14 was that sideways move in the XLF. Now I said usually it pulls back a little bit from the sideways pattern, but if you're looking at the technicals are very strong on the daily, extremely strong in the weekly, but the on-balance volume's a little bit overbought, and the monthly chart is great, and that the KRE, so we're in a bank stock in the XLF, which is doing very nicely. The KRE, we started position just recently. It's holding very nicely. It's at 65.52, down 20 cents, but all of it is in the upper range. Look, the 9-period moving average is way above the 14. The MACD is good. Stochastics at 79%. I prefer if it was at about 83, but that's okay. And the weekly chart is very strong, making a leg D, maybe a peak D this week. But look at that strength in the monthly chart as well. And that says that catch-up that we're looking at that goes from the core index or sector to its subsidiary, and in this case, the cousin, the KRE, the S&P Regional Banking ETF, is finally doing pretty well. In fact, very well, considering that it had a gap 2.5 weeks ago, and it hasn't even come close to filling, even getting into the gap. So to me, that is a good thing. So I'm sorry, all these extraneous things like a little thing like missiles. I'm impressed at how the market is acting. That's all. Right now, at the end of the day, I could say, wow, that was wrong. Or I could say, yeah, I think so. And we're seeing people, these fund managers, starting to come into the market. And I like that. So for subscribers, we're in a mix. We're in a situation where we've got sort of under the radar areas. And I think that that's important. So the JP Morgan, just real quickly, JP Morgan is, it hasn't made a new recovery high to the all-time high. And that was, there's another one of those double tops exact. So 240, 248. Oh, I saw that and then I forgot to type it. Or I did and I lost it. 248. You know what I'm going to put here? Round number, high. What does it do? It tests it yesterday, and it goes to what? It goes to 247.93. So this is a high-level consolidation, outstanding action. Right there. And the weekly chart has improved a lot. And this is an inverted Chapman wave Roman candle from 3 weeks ago. We've gone halfway into it, closed above it last week. This is all very positive. Leg E in the monthly chart. So I like that. Okay, question came in. Basil, you forgot about Bitcoin. I didn't forget about it. I was just holding off. I wanted to see how it held up for the first hour or so of trading. And lo and behold, it's up 725 at 92,785. Look at that. There's a high-level consolidation. It's gone sideways. Usually sideways means you've got to be a little careful because it could test the base of it. So far, it's acting really well. It's only leg C in the weekly. There's a Chapman wave cup and ladle pattern to D. We're in C right now. It should still go to a D. That's really positive. So Bitcoin futures, continuous contract, really strong. We are still long. We actually have IBIT. Is that, yeah, that's the same pattern. They're doing the same. And that is a leg D in the weekly chart. So there's a little discrepancy there. What was the other question we had there? Microsoft? Even the Finviz finds head and shoulders top. Yeah, so I love what I'm seeing. Now, I shouldn't be so happy because for a guy who got the futures this morning, down at 58.75 and it's trading at 59.08, and I got out earlier and I just haven't had a chance to get back in. Look at that. We're at 59.09.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks. So we've got a message in the den that says Iran agrees, quote, Iran agrees to stop producing near bomb-grade uranium, IAEA. And then Jimmy says, I'm brokering Larry's remaining shares in the Brooklyn Bridge. First come, first served. Nice, good comments there in the den. Yeah, so, okay, let's look at uranium again. Okay, URNM had a nice spike yesterday, slipping a little bit today. This is a work in progress because the MACD and everything in the daily chart is suggesting a pullback, which we did get. Now we're starting to see almost a crossover to the positive side. So if uranium, Sprott uranium minus ETF actually pulls back below 46.50, that says, yeah, that's probably correct. And we're just not going to talk about uranium for a little while. I'm not sure that's the case. But if it actually goes from 48.51 to about 50.03, just get into that 50s, I think it starts a cup formation that says 51 would be the next level. I don't know about the 54s where it went to in the weekly chart. Just go one step at a time. And the 9 and 14 in the weekly chart is good, not great, it's just good. MACD is weak. It is positive, but weak. Stochastic is weak. On-balance volume is weak. But that monthly chart, the 9 is very strong in the 9 over the 14 in the monthly chart. MACD is weak. Stochastic is weak. On-balance volume is quite good. So we'll see how this plays out. So in the meantime, back at the ranch, I just wanted to have a quick look because I had a question about the weekly. Yes, I've got the weekly. There we are. We're exactly at that level. Remember, I said 59.12. I think I said 12 was the 200-period exponential moving average. We've just touched that. Leg B could stall a little bit here. It's at just above the 200-period moving average of the 5-minute chart. And that's in leg C. All of this is just suggesting that when you can step aside and get away from the news, just as the news was so wrong about the election, I would say just certain parts of the news were just so wrong. You've got to ignore, you've got to do your homework. You do your homework and you can see a little bit more of the clarity of the, I always like to say when people ask me, what do you do? I say, think of me as an MRI guy, except I do it with stocks. I try to look at the internals, and that's the technicals. That's all you do. Okay, don't have to see the patient, just have to see the MRI. All right, question came in here. Could I look at CONL? I remember seeing the symbol, and now I can't remember what it was. I think it's an energies play. I might be wrong. CONL. Oh, I did it on the 1-minute chart. Forget that. No, this has to be the larger context. There we go. CONL. CONL. Consolidated something, I think. Oh, no. Oh, that's the Granite shares. Granite shares, what is it? The Granite shares of? Granite shares, 2 times long. Oh, coin. I forgot all about that. I was asked about it before and I forgot to do the notations. Yeah, this is trading at 64.68. Now, I haven't had the chance to go through all the different Bitcoin variations. But, I mean, now you're starting to get a plethora. That makes it a lot more legitimate, but it makes it much more difficult. For me, I just wanted for my subscribers to go to Bitcoin via the IBT, which is the IBIT, which is via the, let me just get this done here, BC. That's via the iShares. They came in late, and that's good because it meant that they had to go through the whole, all that research, and they had to do due diligence, etc. So I do like that. So that's the one we've chosen. This one, I don't know exactly what area of the Bitcoin they're in, but it's acting very well. I went to a leg. I'm calling this a leg A, not an E, right here. That was the move early November to the just over 70. Then it pulls back to under 50. And right now it's coming back. It's at 64. So if I do this just purely on the Chapman methodology, then you get A, peak B, peak leg C to this week. If there's no new recovery high, it should go to a D. All the technicals are suggesting that, although the stochastic's only at 63%, I would have had a lot more confidence if it was at 83. I'd say yes. But this pattern right here is a strong move to the upside, and I can only do this chart on its own merit because it is, whoops, that's a B. It is an IPO late. So if you go to Bitcoin, it'll be a completely different thing. This one did make a peak D in the monthly chart, pull back sharply, and this is a gray A. I call it gray because I don't have any confirmation yet that it's in a buy signal, although the price certainly suggests that. So this is called Granite Shares, 2 times long, coin, something, coin direction shares, or maybe, yeah. So, okay, as it stands right now, it's doing very nicely. So if it's able for 2 out of 3 sessions over the coming, without closing under 58, it's a 64.29 right now. If it's able to push above the 71.68 high of the 11th of November, then what? Oh, 11. That's very good. So 11/11/24. Well, it's been a long day, a lot of trades. So that would be very positive and suggest that will be B and that there should be a C and a D to come. I hope that helps you. 2 times coin ETF. Yeah, okay. I figure that's what it was. That's fine with me. It's in the same area. And as I say, I think that Bitcoin hasn't yet had a... I think this is the move. Let me just do this again, BTC. I think this is the move that gives it, where did I type that? Oh, I typed in the wrong place. This is the move that gives it a little more legitimacy. Also, you've got, I might be wrong. Did I read something about Trump wanting to, his DJT? Let me just do this. So he has this Bitcoin high-level consolidation under 83,500 in the next 3-4 sessions. Says, okay, now you're having a bit of a timeout. But this breakout in the monthly and the weekly chart is suggesting strongly that this is a much more legitimate move, that it has a lot more veracity. There are more people behind it, more big funds behind it, and it's probably getting the political veracity that it needs, that confirmation. So I do like it very much. I think this is a lot more sustainable, even if there is a pullback. Okay, so another question came in. No, I don't need that. I need this. Okay, I'm getting mixed signals right here. Okay, that's got me back again. Okay, quickly, let's just do this. Here we go. So Monster. I always call it Monster because I thought that was the old symbol, but it's not. It's called MSTR, MicroStrategy. Huge move, new all-time high, up 27 at 412. This is fantastic. Leg C, which is still going even higher. What was the other one that we're looking at? MSCI, I think it was. MSCI, up 4.66 at 597.77. This is the one, MSCI, huh? Yeah, but what was the one that was up 25 earlier? I'll check it out in a minute. Let me just move this away. I'll be back in a moment. Dow is down 200. S&P is down only 4.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. So, yes, we got to that 5-minute, the 10-minute 200-period moving average of 59.13. That's where we're at right now. It's only leg B. So over the period of the afternoon, we should still see a C and a D if this is the way it's going to work out with all the technicals still strong. This is the E-mini. All right, let's get back to our story, just wrap it up. What we're looking at is SMCI is up. Is that the one? It's up 6.40 at 27.96. Is this the one that needed to get some confirmation that they had financing? I think so. Anyway, so I just wanted to mention that. So someone in somewhere had put that in. Okay, let me just run this through quickly. The Dow is coming back a little bit from the low. I just didn't have the courage today because we have such nice positions. I didn't want to start messing around with them. I was going to add to our 3 times long Dow. And I just decided this time that everything works out, I could still do it tomorrow, but maybe even Thursday. We'll see about what NVIDIA does. NVIDIA could be outlier in the sense that the market is much stronger. I just showed you Alcoa and other areas that are very strong. That's the core of the structure of the economy. So there's a chance that even if NVIDIA comes out a little disappointing, that the semis just kind of stall. They continue not leading, but they don't really break. That's the thinking. Okay. But my thinking mostly right now is that there's still internal strength that I can see, and I'll be wrong if the Dow, which is at 43,177, closes any day under 42,500. I have to say, you know what? I think we've got more to go on the downside, but so far it's good. So I just wanted to put that into the picture and say that I'm not trying to be Pollyannish. This is what I'm looking at. This is how we've positioned ourselves. We'll see what happens here. And as I say, there's some areas like Bitcoin that is still held very well, and even gold is holding quite nicely. But that's more the trade side of the gold. So have a wonderful day. Check out my opening call, my daily newsletter. You also get my video. And Steve is